Good morning. Welcome to the pre-market prep for this week, December 18th, right? It all starts with December 18th. It all starts with Monday. It all starts putting your best foot forward right here today and aiming to get 1% better. That's what we do each and every time that we step into this arena. So what we're looking to do, how we're looking to execute. And I'm excited to be here for another week, right? We're closing in. We got the holiday season in full swing, as evidenced by what's supposed to be a candy cane back there that you can't fully see. Let's see if we can raise that up a little bit. There we go. A little bit better. Camera's tilted though. That'll work. But yes, good morning. Good morning. I hope everybody had a great week. Nice, restful, and restorative weekend. Ready to get after things this week. We've got a lot of interesting swing looks that the market is presenting to us that we're looking to take full advantage of. And I'm excited to do so. So make sure you drop those ones in the chat, right? Make sure you mean it. Make sure you do it with heart. Do it with intention, right? Stating your intention. You don't want to make it just, matter of fact. You don't want to make it something that you don't mean. Sorry, I've got some type of hair hanging in my eye. You want to make sure that you do what you mean and you mean what you do, right? So every single time that we step into this arena, we want to be doing so meaningfully, right? So that we get meaningful results and replicable results, like some of the great ones that we got last week, right? Which made for a really nice week. We had a number of things come through, both short term and then a lot of great setups long term that we're looking to see develop and continue to flesh out over the course of the coming days and, of course, the coming weeks. You want to make sure that you don't wait till the new year to start doing amazing things to change your life. That's the big thing going into 2024, right? Don't wait until 2024 starts because, again, you end up with way too much on your plate to feel okay about getting started with anything. Start now, right? Start, what is this, December 18th, right? A week off from Christmas. Start now, right? Start December 18th. Don't wait until January 1st where you got to get a six-pack and pay off your student loans and be there more for your nieces and your nephews and spend more time with the elderly ones in your family, right? That just ends up being a packed schedule where nothing gets done, right? Start now. And I'm loving seeing a number of you are taking that initiative and you're starting now. You're getting after it now. It's amazing. It's a smart thing to do, right? It's the most rewarding thing to do. And it makes attacking your goals a lot easier, right? So do that workout now, start meditating now, all that great stuff. Get that started now. So that way you've got manageable things on the docket as you head into the new year. Because it's tough after doing all that running around, right? For Christmas and New Year's and Hanukkah and whatever you celebrate, right? You do all that running around and then you're gassed going into the new year. And now you've got 100 things on your to-do list. It's just not manageable, right? So let's not do that to ourselves. Let's just make resolutions pieces of our to-do list, right? Today. Pieces of our to-do list today. That's the motto. So you guys know on Monday we got our deluxe session. We go into what we expect out of the week ahead. And then also we go into our Monday specific news. So we're going to do exactly that. We're going to start with the week ahead. Let me go ahead and pull up our economic calendar as well to have in the background. So the economic calendar is heavy this week as releases covering housing, manufacturing, and consumer sentiment pour in just ahead of the 3-day weekend for the Christmas holiday. The key release will be the monthly update on core PCE. The Federal Reserve's favored inflation gauge is forecast to show a soft 0.2% month-over-month rise in November to take the year-over-year rate down to 3.4%. Crucially, that mark would also imply a 6-month annualized inflation rate of just above 2%, which is the Fed's stated inflation target. If the core PCE number comes in close to expectations, the buzz over lower interest rates may continue. At the time of publication, federal funds futures implied a 95% probability that the Fed's target rate would be lower than the current level after the May FOMC meeting. Globally, the Bank of Japan meeting next week also has the potential for some dramatic news on the end of the negative interest rate era for the nation. Meanwhile, notable earnings reports in the U.S. include updates from FedEx, ticker FDX, Nike, Carnival Cruise Lines, right, CCL, and Micron Technology, ticker MU. So in terms of the earnings calendar this week, we've got FedEx on Tuesday, General Mills on Wednesday, Micron Technology. They make, little computer chips. They're on Wednesday as well. And then Thursday, we've got CarMax, Carnival, and Nike all reporting as well. So the tail end of earnings season, but still some household names that are set to report. No big events on the event schedule or anything like that. So we can kind of dive into our Monday specific news, but I also want to check the economic calendar as well. So for Monday, home builder confidence index, not really important. Tuesday, nothing super important. Wednesday, also nothing really important. Thursday is when we get important news. Jobless claims at 8:30 a.m. GDP numbers at 8:30 a.m. So the GDP revision. Um, Anything else important? Not really. Friday, of course, we get the PCE index, core PCE, right? Personal spending. So really, Thursday and Friday are when we have things on the economic calendar. Otherwise, we're pretty empty, which is nice because that means that we can let price action work uninhibitedly. Need to get some lotion on these hands. Did a workout earlier and feel like I did so before moisturizing up. You guys know how it is in the winter. The ashiness can set in with a quickness. But getting back into what we have going on with stock news, specifically our Monday news, right? Let's look into that here. So put a 2 in the chat if you understand you're good with the layout of the week. Thursday, Friday, the most important days. Those are the days we get the economic data. Other than that, we're set up pretty well in terms of nothing, going on, throwing a wrench in what we have happening. Typically, the market likes to move higher or finish green into holiday weeks, right? So going into Friday, we expect, right, the probability is to finish higher than where we opened this week, right? That does not mean that we can't go lower over the course of the week. That does not mean that we are going to rocket up $20, $30 on SPY, right? What that means is if we open up at, whatever it is, I don't even know what SPY is at right now, but let's say it's at 401, which is not, it's in like the 460s, 470s. Let's say that we open up, at 470. That just means that we're likely to finish at 470.5 or 471 by the end of the week, right? So make sure that your expectations don't cloud what the market, has available or what history says is statistically probable, right? We can get a big run up. Does that mean that we are guaranteed one? No, right? All it's saying is that given statistics and given history, we are more likely to finish higher headed into a holiday week than we are to finish lower, which is really important. And then next week, we can get that low volume, right? Don't ruin your Christmas and your New Year's over trading between Christmas and New Year's. Because again, all big money is not doing anything. They are off that whole time from Christmas until New Year's. They are not working, which means that you should not be putting heavy money into the market at that point, right? Let your swings cook, let your long swings do their thing, but you're not going to be looking to get out here. If the market presents that opportunity, cool, but more likely than not, you're not going to be looking to get out here and day trade your butt off headed into the new year. In terms of our Monday specific news, let's get into it. Our top news on the high seas. 2020 was COVID and 2021 was the supply chain. 2022 was inflation and 2023 was interest rates. Now the biggest investing risk going into 2024 looks like it will be geopolitics. Traditional relationships and alliances are breaking down, and a more polarized world has given way to structural market risk. It can also be hard to plan for such wild cards through broad hedging and defensive plays, though broad hedging and defensive plays could play a key part in the investing strategy for the new year. In terms of a snapshot, one such risk is already at full display, with Iranian-backed Houthi rebels in Yemen conducting repeated drone and missile attacks on commercial vessels traversing the Red Sea. The Bab el-Mandeb Strait is a crucial shipping passage that facilitates a sixth of world trade and is important to global seaborne commodity shipments like crude oil. Insurance premiums have risen as a result and have even prompted the world's biggest container shipping lines to avoid the Suez Canal by diverting their cargoes toward the, circuitous route around Africa. Among them are Swiss-based MSC and French CMA and CGM, as well as Danish AP Moller Maersk, German Hapag-Lloyd, and Hong Kong-based UCL, OOCL, where stocks have climbed 8 to 7% over the past week amid rising prices. They're really testing the ability to pronounce different words in different languages and dialects. We got the Houthi rebels, we got the Bab el-Mandeb Strait, we got all this stuff going on right now. Speaking of the Houthis, we're back here with them. So the Houthis had originally said they would target Israeli-linked ships to show solidarity with Hamas, but that has since extended to all ships en route to Israel, and the assaults have even continued against other ships regardless of their destination. Defense Secretary Lloyd Austin is in Israel on Monday to discuss the latest developments and will travel to Bahrain and Qatar this week to follow up on the talks. It comes as American troops in Iraq and Syria have been targeted by Iranian-backed proxies over 90 times since mid-October, and the U.S. enters the coming year with its smallest military force since 1940. Active duty troops will drop to 1,284,500. Now, what's on the table? American ships like the USS Carney and fellow destroyer USS Mason have been neutralizing threats in the Red Sea since the start of the Hamas-Israel war, but a larger force is now needed. The new plan appears to be an expansion of the combined Task Force 153 into a broader maritime alliance that will initially be called Operation Prosperity Guardian. They're using a lot of semantics in order to kind of dance around the fact that we're at war, right? I mean, at this point, the leak that happened with that intern at the Navy revealed that we had troops on the ground already in this Russia-Ukraine conflict. And as of right now, we're getting dragged into having more troops on the ground and more troops present. They could say part of a maritime alliance, but if we're there and we're fighting, then it's war. So it's a wartime alliance. So I get it. You have to save face and say we're not at war and we're at peacetime and da-da-da-da. But if we've got troops on the ground, in the Russia-Ukraine conflict, even if it's just training or if it's just small pockets of special forces, and we've got, ships in the water shooting down missiles in the Red Sea, then are we not already at war? So I agree with the sentiment in this section talking about kind of what the biggest risks are headed into 2024. It's geopolitical risks. And one thing that we do know is that war is good for economies. And you have a lot of economies that are struggling, right? Dealing with inflation, coming out of inflation, coming out of, areas with high interest rates or coming out of time periods with high interest rates. Nothing is more profitable than war. So it's just kind of one of those things where it follows naturally, to be honest, right? With all the geopolitical tensions going on. And then you have, China in a very tough and dire strait. Like nothing gets the economy going like conflict. So, unfortunately, it's not dying down. And it also seems to play nicely into that narrative of economies needing to get things going, and also a common enemy. Nothing unites you like a common enemy. So it's one of those things where you have to keep a beat on the storylines of the world, right? Keep a beat on the storylines of the world. I'm not a conspiracy theorist. I'm not here because I like to see carnage. I'm not here because I support war. I'm just here because it's important for us as human beings to maintain a close eye on what's happening so that we can make sure that doesn't affect us putting food on the table. That's all I'm here to do. Not here to predict, not here to take credit, not here to do any of that. Just say, this is what's been going on over the course of the past year and a half. I need to see where the puck is going, right, and skate toward that. So what's on the table? American ships like the USS Carney and fellow destroyer USS Mason have been neutralizing threats in the Red Sea since the start of the Hamas-Israel war, but a larger force is now needed. The new plan appears to be an expansion of combined Task Force 153 into a broader maritime alliance. We talked about this that will initially be called Operation Prosperity Guardian. The Pentagon is also deliberating whether to directly strike Houthi military targets in Yemen to protect maritime security. Though until now, there have been fears of potentially fueling a broader conflict with Iran and its proxies. That's the issue, is that the world is tiny. Once you start firing on people and attacking people, it's a domino effect. So we'll stay, apprised on the situation as it develops. In terms of automotive news, only ZEVs. So Canada is moving ahead with its electrification plans, with new rules expected to be issued tomorrow, requiring all new passenger cars sold in the country to be zero emissions by 2035. The regulations are aimed at shortening wait times for EVs and ensuring enough affordable zero-emission vehicles are available to meet demand. Canada wants ZEVs to represent 20% of all new car sales in 2026, 60% in 2030, and 100% in 2035. Brian Kingston, CEO of the Canadian Vehicle Manufacturers Association that represents Ford, Stellantis, and GM, said stronger incentives are needed to make ZEVs more affordable instead of a mandate on, quote, what Canadians can and cannot buy. I don't know. I don't really have a comment. I don't think this really affects the way that anything is going because I don't think it affects any of those, vehicle makers. Like I feel like this is something that was already put in place. Everybody's moving toward, electric vehicles and zero emissions and all that. So, and also this is stuff like this where it's like you can say, oh, we've got this electrification plan where da 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 da, da, and then something happens and they're like, yeah, screw that plan, right? So I don't really see this as being significant at all. Healthcare, no Grail, Illumina, ticker ILMN, plans to divest its cancer detection unit after a Fifth Circuit Court of Appeals ruled that the FTC was correct in finding $7.1 billion purchase of Grail competitive. So once again, we've got, the regulatory agencies and bodies of this administration striking down deals. So they're saying this is anti-competitive. Illumina cannot purchase Grail, and yeah, this another one struck down. Right, the FTC has ordered Illumina to shed Grail in April, with the European Commission following suit in October. Illumina, which won't appeal the court's ruling, plans to divest Grail either through a sale or a capital markets transaction, with the goal of finalizing the terms by the end of Q2. Illumina has already received buyer interest for Grail, which it acquired in 2021, and Seeking Alpha analyst Main Street Investor believes the divestment could unlock significant shareholder value. Now, yes, and I love it. Good morning, fam. Good morning. Great having everybody here, ready to attack a new week and make some money here. In terms of economic news, soft landing. Economists may have what to celebrate as inflation. I don't even know what they meant to say there. Economists may have something to celebrate as inflation is projected to near the Fed's 2% target next year without a recession or a surge in unemployment, according to the Congressional Budget Office. Inflation is expected to fall to 2.1% in 2024, reflecting softer labor markets and slower increases in rents, but will tick up to 2.2% in 2025. The CBO also expects real GDP growth to slow to 1.5% in 2024 amid a slowdown in consumption, investment, and exports. Seeking Alpha investing group leader Lawrence Fuller said traders should be wary of the overly optimistic bullish sentiment, even though a soft landing is near, while Mott Capital Management believes the Fed showed its cards too soon. Yeah, everybody's going to believe what they want to believe. Only time will tell. At the end of the day, what I'm expecting is we go in, we decrease interest rates, we do inflation shoots back up. We have to deal with this for longer. That's what I'm expecting. But we'll see what ends up happening. But as of right now, that's what's super likely to happen. We're going to drop the rates. All this pent-up demand, right, is going to shoot through the roof, and we're going to have prices shoot right back up. I mean, again, we've got divorced couples living in the same house because they cannot afford to move out. So, the second they get the chance to do that, they're going to do it. In terms of today's markets, mixed bag, really. Looking kind of flat, to be honest, though. Whenever I see the Dow at 0.1, S&P at 0.1, I'm like, all right. In terms of what else is happening, we'll finish up here with our stock news rundown. IPOs 2024, watch for Fanatics, Reddit, Sheen, and more. Chuck E. Cheese exploring sale, maybe over $1 billion. I just sell all that real estate to Amazon and use it as fulfillment centers and call it a day. Apple facing expansion of China iPhone ban. Scandinavian investors join Tesla labor fight. Elon Musk, don't shun fossil fuels amid green transition. KKR buys $7.2 billion RV loan portfolio from BMO Financial. Fashion executives see upcoming uncertainty for the industry. NVIDIA stock outlook, what to expect next year. And then Alex Rodriguez's SPAC slam to merge with Link Global. Redfin, U.S. housing market to shift in buyers' favor in 2024. Did we mention Redfin in last week's Q&A, or did we mention Redfin in last week's Q&A? Timestamp it. This is December 18th. We mentioned it last week, 3 days ago. Was that December 15th? I'm just saying, IJS, Redfin, ticker RDFN. Anyways, guys, that'll wrap us up. Put a bow on it and take us out here for this morning's session. We're starting the week, and we're looking to start the week off strong, right? So I'm logging into Thinkorswim here as I'm talking, but we want to make sure that we take advantage of the opportunities the market has available for us. Don't try and force anything, right? And learn from your mistakes. Don't just execute and then do the same mistakes over and over again. If you find yourself taking too many things short term and the longer term stuff is working, go for the longer term stuff, right? If you find yourself struggling with management, do what you need to do in order to assist with that, right? Set the extra alerts, set the reminders, get that notepad, get that dry erase calendar, right? That dry erase board. Do whatever you need to do based off of how you work, because we're all different. And it's a beautiful thing, right? We're all different in all of our different ways. Know what you have to do to make you work, but know that it can work, right? You don't have to say, oh, this doesn't work for me. It works for you. Everything in this world works for everyone. It is just how much effort and what system you have to put forward in order to do it, right? What do you have to do? I have the capacity to be an underwater welder. It might not be the best at it. Absolutely not. Is there still a system I could put in place to be competent at it? Yes, right? Yes, absolutely. The same goes for most things. Whether I went to be a fry cook or a software engineer or something, right? Yes, you have natural, kind of inclinations that make you better, but that doesn't mean that you're unable to do it at all. And everybody is able to execute in markets. Every single person alive, right? So take that to heart, understand that, and just work on tailoring the little things you need to do to make it work for you. And you'll find that success that you're looking for. So, pretty sweet ending, if I say so myself. Candy canes, I'm a big fan. I'll probably have some going into the holiday season. Let's make sure we have a sweet end to 2024, right? And that starts each and every day, putting our best foot forward. Everybody have a great rest of your day. See you back here tomorrow for our next pre-market prep session. Have a good one.